It's a fundamentally pivotal week for Bitcoin and the broader crypto market. Hey guys, it's Keith Allen. Hope everybody had a great weekend and you have your eyes focused on what's going on in this market because it's getting a little nutty. I'm not gonna lie. Unbelievable news this morning as the DOJ now going after Fed Chair Powell. Unbelievable. Not good for really not good at all, any way you slice it. But that's not even what we're going to focus on here this in today's stream. We've got quite a few things to talk about. Of course, we're going to talk about what's happening in the charts. We're going to talk about what's happening in the U.S. Senate here. And I mean, if you want, we can touch on the Powell thing, but I think that's kind of benign at the moment. We'll see. It's certainly just for anybody who hasn't heard or read the news. Trump's DOJ has basically told Fed Chair Jerome Powell that they're going to try and indict him on criminal charges, using the guise of his remodeling of the Federal Reserve offices. Like that wasn't approved by Congress before, right? When the reality is that Trump is pissed off at him that he hasn't reduced rates as much as he wanted, and so he's going to try and smear him as much as he can because that's the kind of guy that Trump is. I would listen. I'm not a legal analyst. I'm not an attorney, but I have a hard time thinking that this makes its way. It may get pushed through, but a conviction seems very far-fetched to me. But, what do I know? What I'm more focused on, excuse me, at the moment is what's happening in the charts and what is happening in the U.S. Senate this week as the Clarity Bill is finally making its way there. You remember back in what was it, like May, June, that the Genius Act and the Clarity Act made its way through the House of Representatives, but both bills did not make their way through the Senate at the time. And so we've really been waiting for months and months and months for that to happen. And now that time is here. So we'll touch on that a little bit. And of course, as you know, if you've been following me for any length of time, I do not like to speculate. I would much rather let the charts guide us on our decisions, and we will keep in the back of our mind what is happening fundamentally that may impact things. But let's face it, if the fundamentals really mattered as much as you would expect them to, as much as I would hope that they would at this stage, then we wouldn't see the kind of pullback that we've seen here over the past several months since October, right? So with that, I think we can start to push ahead here. Before we do climb into the charts, I'm going to ask you the favor of smashing some buttons for me and helping me grow the channel. Hit the like, hit the subscribe, so you never miss any of my future streams. I promise you, I drop the free alpha on you guys all the time. And do me one more solid. I do this for free. All I'm looking for is a little engagement, right? So live chat is open. These are always more fun for me and more valuable for you when you guys participate. And if you would hit the share and invite one of your or more of your friends who trade crypto, or better yet, share it in one of the communities that you engage in. Speaking of communities, we have a fantastic global crypto trading community on Telegram. You'll find a link to it in the description down below. You'll also find it at the top of the X channel for Material Indicators at MI_algos. You'll find it on the Material Indicators webpage, on the YouTube channel, and on the CoinMarketCap page, where we're now also posting content. So all that being said, let's go ahead and start sharing charts and get into the mix here. So you remember last week, past couple weeks, I've been talking about a golden cross happening in the lower time frames and a death cross, developing in the higher time frames. And so I want to start by looking at that. Things have actually been developing a little bit slower than I had expected. But for the moment, everything that I said is still accurate. We're just not seeing the volatility. So, one correction is we're not seeing the volatility that I expected here. And maybe one of the reasons for that is this pending legislation happening in the Senate, and people are maybe waiting to see what happens there. Let's go ahead and share the candle chart to start, and then we'll get into fire charts and take a look at the liquidity, et cetera, and see how things are developing from there. So you see we have a nice doji candle forming here on the day. We actually had trend precognition signals. You can see the A1 signal down here is lit, and we have had a flashing on and off A2 signal that is at the moment gone. So the fact that it wasn't there from the start, or actually it was there from the start, but it's disappeared earlier and then it came back and then it disappeared. It wasn't what I was putting a lot of value in, but still valid nonetheless. However, the fact that we dip below at some point in time, we dip below the yesterday's low is what would have invalidated that candle, that signal for me. Nonetheless, what I wanted to focus on was this golden cross here, which may be maybe like the weakest golden cross ever. I mean, look how these two moving averages are overlaid, and you can see up here on the left hand side. I'm showing you what the actual values of these two moving averages, so you can see how closely correlated they are. I mean, we crossed up briefly and then unwound and then crossed again. I mean, it was a $4 difference between the 21 and the 50 when the golden cross officially formed, and then over the weekend it's been like flat and back and forth. Then they unwound, and then they yesterday the 50 was back on top, and now today, where are we? By $20, we're in a golden cross situation. And I had really expected to see price move up when this started, but it never really spread apart like I expected it to. And maybe it will from here, maybe it won't, but we still have something forming on the weekly chart that makes me wonder how much upside potential this really has. And you remember, for anybody who caught the last stream last week, I talked about what may or may not be doing well in terms of these golden crosses, right? So these golden crosses between the 21 and the 50, they're not an automatic moonshot, right? There's a lot of times where they are. You can see this was a big move here. You can see I'm going to actually eliminate the other two moving averages just so we can focus on these two. You can see a situation here where it did lead to solid upside. You can see another one here. Big upside. We keep going back in history, and you'll see the history of these golden crosses is usually quite positive, but there are occasions where it runs a little bit flat. Look at this. This was kind of a double top area here where we had a death cross that lasted a very short amount of time, and then the golden cross really never really took off. It was the beginning of the breakdown. This was just really testing of the breakdown before we double bottomed here. And I think we'll find another instance of that. Golden cross, boom, big move. Here's another one, right? This is kind of indicative of what we're seeing right now, a little bit of a chop before it actually resolved its way to the upside. There was some spread between the 21 and the 50, and then things moved up. Back in 2021, golden cross, that one did well. The second one had a short run before the 2021 top. So you get the idea. They're not 100%. But what is 100%, or at least so far, is the death cross between these two on the weekly time frame. And this this is a has been pretty much a one per cycle event. And if we go back in time, we can see that these death crosses between the red 50 and the green 21 are typically very bearish. Okay. This is back in 2014. If we move into the next cycle, the second cycle, we had another one. Here's 2018. We go back. This was the COVID crash, so I'm calling this one a bit of an anomaly. Um, and then we look at, here it is, 2022. This was at the end of the 2021 top, right? We topped out at 69K, and we had a big breakdown from here. So this is really a bear market confirmation, as if we don't have enough. And so, as you can see, it hasn't formed yet, but it looks like we're on a pretty solid trajectory for this to happen within the next week or two, right? Probably the next week, but I, I proved to not be so accurate in my calls on the shorter time frame, on the lower time frame one. So, maybe this trajectory changes if we get a God candle and the 21 week moving average pulls out of this nosedive. But barring that, I think we're on a course for this to happen here in the next week or two. And that would be very bearish to me. You can see we have a short signal on the A1 algo down here on the weekly time frame. So this would supersede higher time frame charts, and higher time frame signals to me are more reliable, more accurate, and have the overriding, how should I say, kind of dominance versus lower time frames. So for the way that I like to trade, I always in the back of my mind, even if I'm doing a short term trade, a scalp or a swing trade, I always in the back of my mind, I'm like, what is the higher time frame going to do? So everything that happens daily is really just intra week. So sure, we can get ranging happening on daily time frames that may not, that's going to likely going to stay within the parameters of what the higher time frame chart and signal is telling us. So this is telling us that this week is not likely to go higher than last week, which was at about 94,800. So, we're not likely to clear 95,000 this week. That's a low probability that we will, in my opinion. Now, that signal could certainly get invalidated, and we could certainly get some news that invalidates it. I mean, gosh, we certainly have some very interesting things happening right now. And this is where I want to focus my attention on what's happening in the Senate. Because this is something that, even though I say that I'm focused on charts and the charts are going to lead my decisions, that remains. Okay. But this is something that has the potential. I'm not saying that it will, but it's one of the few things that has the potential. This is big enough to potentially reverse the trend. And that is the Clarity Act. Now, why is this so important? There's a lot of provisions in this bill that, quite frankly, banks and the biggest institutions have been waiting for before they really come on strong. I mean, we've already seen banks starting to come in, but we haven't seen, I think, real widespread adoption on that yet. And we haven't seen them come in with their full force just yet. And so if you're not familiar with what's in this bill, there's a couple of things that come to mind here, a few things that I think are really going to make a big difference in how this, how crypto is perceived by these banks and institutions, what they're capable of doing, what they're going to be able to, what it's going to allow them to do. So this this bill serves as really the primary vehicle for establishing a federal framework, largely for the regulatory environment. Um, and so, because I'm not a legal analyst and because I'm not a political analyst, I did employ the help of some AI of Gemini to give me kind of a summary of what's happening here. So, verify all of this on your own. Um, do your own research, but here's the basics of it. So, the Senate Banking and Senate Agricultural committees are scheduled to hold formal markups on this Clarity Act this week on January 15th. So that's today's the 12th, 13th, 14th. That's another 3 days away. Um, and the objective is to divide the regulatory oversight between the SEC and the CFTC, classifying most tokens as digital commodities. There are some stablecoin provisions in here, and this is kind of a follow up to the Genius Act. And so this is a little bit of a sticky situation. I don't know about you, but I personally enjoy the fact that I'm earning yield on my stablecoins, on USDC specifically for me. Um, so senators are still negotiating specific language regarding stablecoin rewards to make sure that digital asset products don't mimic bank-like services without equivalent protections. Now, I I am concerned that that banks actually are the ones lobbying for this, and that they don't want, um, if you're in a U.S. bank, most U.S. bank savings accounts or checking accounts and savings accounts don't earn hardly any interest at all. I mean, it's like it's ridiculous. It's a joke. And you can earn pretty good, pretty decent interest on stables and on crypto exchanges or by staking. And so I'm wondering if they're trying to eliminate that ability, that that vehicle for stablecoin holders. So this is still up for discussion. It's still up for negotiation. So we don't even know at this point what version of the Genius Act is going to make it to vote, if it even makes it to vote this week. So that's why there's to me no real value in speculating on what's going to happen, because there's too many variables. Um, there's also something in here that I know that the crypto community is very, very interested in, and that is strategic Bitcoin reserve uh, details. And so there's a separate funding package, at least according to Gemini. There's a separate funding package hitting the floor this week that requires the Treasury to report on a potential strategic Bitcoin reserve and the existing U.S. digital asset stockpile. So maybe we'll know exactly what's there and how they intend to get it. I mean, Trump has said all along that he wants to acquire more Bitcoin at no cost to taxpayers. And at the moment, it seems to be a seize and hold strategy. We're not even clear on whether or not they're going to take Bitcoin or stable coins or any digital assets from Venezuela. Um, that situation is still fluid and messy, in my opinion. But those are, I think, some of the primary things of interest in this bill that, again, is going to be negotiated. They're doing their markups and hopefully going to vote on it before the end of the week. So, what are some of the strategic implications for banks out of this? Well, number one, they're going to get custody opportunities, so they'll be able to, um, and this started with the Clarity Act. Traditional banks are going to be able to act as digital asset custodians. So that's a big deal. So imagine being able to um, go to your traditional bank, Bank of America, Wells Fargo, TD, Regions, whatever, and either buying or or holding your digital assets in a wallet within that bank instead of on a traditional crypto exchange. Well, what's the value of that, you might ask? Because hey, maybe it's not going to be the greatest place to trade. Maybe you may or may not be able to trade there. Um, ass- Assuming you could do so with a Fidelity account, right? Or a Schwab account or something like that, or a Merrill account. Um, there's, in my opinion, much less counterparty risk with a legacy bank than there is with crypto exchanges at the moment. So I think there's some value in that. I do wonder if we will get FDIC protection on any of, at least on stable coins being held by banks. That's something that's I've been wondering about for a long time. There's also some stablecoin competition going on, trying to bar non-bank entities from offering interest-like rewards. This is what I was talking about before, right? So this is the thing that I think that is sticky, and this is something that Coinbase certainly doesn't want to see happen because they're paying rewards, but keep in mind they're earning much more than they're paying you. So it's going to be interesting to see if that stays in or not. Now, what impact is this going to have on price over time? Again, this is really hard to speculate because we don't know what the final version of this bill is going to be, right? Does the stablecoin part stay in or out? Does the who gets the regulatory oversight and who is going to be, what's taxation going to be? All of these things. I don't know that the tax code is specifically in this, but we keep hearing rumors of less taxation on crypto, and maybe it's only for $300 transactions. That's not all very very clear to me yet at this point. But again, there's there's many variables on whether or not all of these things are going to pass in the final bill, and even if the whole final bill makes it to vote this week. So I would say overall, if it passes, this is still fundamentally positive. Whatever version of this passes is still fundamentally positive for the macro in terms of having more institutional adoption and real money coming into the game at that point. So it could be an infusion for the market broadly. I don't think that banks are going to be messing with every meme coin and shit coin on the market. I think it's going to be a very limited offering, at least initially, starting with Bitcoin and Ethereum and stablecoins. And then, we'll see what happens from there. So, regardless of how this plays out, regardless of what version makes it to vote and whether or not it passes. Obviously, if it doesn't pass, that would be bad, but it would likely get redrawn and negotiated and go to a future vote in a different version. But if it does pass, again, that's largely positive for the market, but it's going to show up one way or another in the technicals. And so that's why I'm letting the technicals continue to drive my decision making, right? So as we see on this chart, if this death cross forms, I'm as bearish as I've ever been. And so even if that passes, right? Let's say that the Clarity Act passes and we start to see um the 21-day moving average change its trajectory. This is a lagging indicator. So that doesn't happen in a day unless you have, ridiculous 30% kind of candle and sustainable, which doesn't typically happen. So, I mean, it's going to take a lot to pull out of this trajectory. And I don't even know if there's enough time to not have this death cross. It could be a shallow one, right? It could be short-lived. That's certainly possible. It could be something it could be something like, let's see if we can find an example of a short-lived death cross. Um, it could be something like this, right? Now, again, this was an anomaly with the COVID crash, so maybe not the greatest example. Um, here's Well, this looks shallow, but it's not as shallow as I'll bet it looks. Let's see what the actual drawdown was from here. Um, this was a death cross, and it was worth 72%. Okay, so looks are deceiving. Um, Bottom line is it might not be wound like if we get positive news and we suddenly see Bitcoin breaking these levels, and these are the levels that we've been watching for a very long time. We have been watching the 50-week moving average. I've been waiting for a retest of resistance here at the 50-week moving average. That has not yet materialized. That price right now is at $101,300. And so I have fully expected to see this happen between now and this death cross, but it hasn't happened yet. And this chop has been a little bit discouraging. Now, the positives of what we're seeing here, number one, you can see we're above the yearly open. Let me put timescapes on, and we can see that we are above the yearly open timescape. I have that one marked also. And but look at this. Look at where resistance is. And I told you this was going to come into play. This is the first weekly open, the first Monday after that quarterly. So on timescapes, we are measuring quarterly opens and the first week of those time frames, and we're pinned between the two right now. We've had a couple of attempts to break out; none of them have succeeded, including one today. So the first level that needs to be broken is this one. The second level that needs to be broken is the 2025 yearly open. That's at 93.3. The third level that needs to be broken would be the trend line. This is an RS flip line at this point, right? This was, I didn't redraw this. This was the original line. Here's where it ended. I just extended it to the right, and it's now the RS flip line. So we need to flip these zones, or bulls need to flip these zones to have a shot at one testing resistance right here. And for the bull market to return, regardless of the Clarity Act, regardless of the drama with Venezuela, regardless of the drama with Iran, regardless of the drama with Chairman Powell, we need to see price make this move. It needs to clear the 50, not just clear it, but have weekly closes above it to give me confidence that the bulls are back in control. And the other thing that needs to happen parallel to that is this moving average. And you can see we're flirting with this now, right? I've told you that this is a secret line right here. This is, well, maybe it's not a secret because I've been telling you about it for a long time. But this is really a good test of bull and bear markets. This is the RS flip line on bull and bear trends on the weekly RSI. And it's not, because it's weekly, it's not enough just to poke above it. It has to be weekly closes. And so we did nose above it briefly, just barely briefly. And we're flirting in that neighborhood. But it's not just this by itself that will validate a return of bull control. It is this in conjunction with weekly closes above the 50-week moving average. Barring that, it's still a bear market. Simple as that, at least in my eyes. So you may have different perspectives, and that's okay. I don't want you to take what I'm telling you blindly. If you don't believe it or you don't understand it, then you have to go with what you understand. But if you don't understand it, live chat is open. And if you're not watching it live, you can drop a comment and I'll do my best to explain it to you. So this is what I'm looking at, right? So we had some discussion in our Telegram group today, about what's happening with the Clarity Act and how we might, view things relative to what's happening there and relative to what's happening in the charts. And I said then, as I say now, let's stick with the charts. The charts aren't going to lie to us. We know the politicians will, but the charts aren't going to lie to us. So I stick with the charts. And the other thing that I watch here, not just the technicals, as I watch the liquidity and the order flow. Okay, so fire charts gives us a good view of both of those. And let me share that with you real quick before we wrap this one. Um, Here we go. As you can see, we have support down here at the 90K level. And this has dynamically been changing a little bit. It started as about 20 million, it faded back just a little bit to 18.7. We started to get a little bit more, 20.7, and today, this afternoon, at least this afternoon my time, is up to 22.5 million. That's not a huge amount, but it's obviously enough to keep things elevated at the moment. We have secondary actually above it, a $7 million bid ladder right here, also helping keep things elevated. And it's not real heavy up here into this 94 range, even higher. Let's zoom out a little bit. Let's go to the weekly. How about we just refresh the screen? Now, what has kept me in trades here has through the weekend has been the fact that purple whales stayed on the gas. Purple whales kept buying through the weekend. And so that was interesting to me. And as you can see, we do see ask liquidity starting to build strength at the 94K level and at the 95K level where there's 25.5 million, at the 97K level where there's another 24 million. So resistance the higher we go, the tougher it's going to get to break these. Now, where were those levels that we were looking at on the candle chart? We were looking at the 50-week moving average, which is above 100, right? 101. Not a lot of liquidity in that area, but there's enough here to prevent us from even getting there at the moment. So there's that. But these other levels, what do we have? We have we have timescapes at 98.5. We have timescapes at our immediate one is right here at the 91.5 level. We've pierced it a little bit today. I took a little profit on that, not going to lie. And to the downside, if we lose the yearly open at 87.5, prepare for a lot more downside. I'm just saying, like, two things are going to happen before Bitcoin resolves its path for the trend. And it's going to be either a resistance test up here at the 50-week moving average, or a support test down here at the yearly open. And if we lose this, and quite frankly, after this death cross forms, I expect us to. If and when we lose this, expect more downside. And I think there could be a lot more downside. There's a couple of different targets that you could look at. I've just roughed out a few of them that I have my eyes on. 74 is the low hanging, that's the near target. That's the lower low. This is on everybody's radar right now. There might be a short-term bounce depending on how long it takes to get here. I would have a hard time believing that this would hold as bottom as much as I'd like it to. Maybe with some really, really positive news like the clarity bill could keep things, elevated from there. But I'm looking at lower targets. I like the 69K level because it was the 2021 top, and we had a lot of consolidation in that range before breaking out on the Trump pump. Remember, election day right here. Boom. There it is. And so if those don't hold, I don't know, man, this 49 to 52 range looks very interesting to me. I've heard targets down in the 30K range, and yes, that's valid, but my goodness, that would really, really be ugly. I don't rule it out, and here's why I don't rule it out. Because when the Genius Act and the Clarity Act first went through the House of Representatives back in, I think it was June, I had said at the time, hey, when banks come in, they're not coming in when the market is making all-time highs. They're going to come in when the market is down in the lows. and they're going to shake out as many people as they can along the way to to get us there. And I think that's coming, especially if if this bill passes. If this bill passes, I think with that in mind, it becomes a sell the news event, and we see, and that may be why we're seeing a little bit of a pump today, right? People, the the buy the rumor, sell the news, right? They're buying the fact that they know this thing is coming to a head here this week, or at least it's expected to. But imagine it's done, and then we have that death cross. Things break down. Banks really want to push price down so that they can load up cheap on cheap Bitcoin and cheap ETH, and then we get the next leg up. So uh, until the technicals tell us otherwise, we're in a confirmed bear market, and I expect bear market things to happen, regardless of these other things. Yes, fundamentally, if this passes, it's a big deal for the industry. It's a big deal for crypto, a big deal for Bitcoin. But let the charts tell you how it's going to go down. Simple as that. And right now, we do have support at the 21 and the 50. This is our this is our underwhelming golden cross. Maybe this resolves wider. At the moment, we're now $12 apart. So this is not super exciting just yet. It could be, right? We start sprouting some celery sticks, then we'll see some divergence here between these two moving averages, and we'll see price move up until we get to this. And when this resolves, and I have that actually marked on this chart, let's take a peek at where that is and see if it's when we think it's going to be. Let's go down here, maybe. Nope, that's not the one. I know I have it. I promise you I have it. Bear with me. How about that guy and that guy? Okay. So as you can see, this is coming soon, right? So by next week, this should, if we stay on this trajectory, by next week, we should see this death cross. So I'm just saying, if we get a rally here, enjoy it while it lasts. Do with that information as you will. Hope that has cleared some things up for you, given you some insight, given you some things to focus on, and helps you make some better trading decisions. At the end of the day, I just do this to try and help us all trade a little smarter. If you're interested in any of the tools, or more importantly, you want to join us in that Telegram community, you'll find all the links in the description down below. Thanks again. If you haven't done so yet, smash that share, smash that like, and smash that subscribe so you never miss a future stream.